This is Super Investors and the Art of Worldly Wisdom. I'm Jesse Felder.
Object to the test!
South Northern April at 142!
Warren Buffett.
Carl Icahn.
John Templeton.
Buy low, sell high. Fear, that's the other guy's problem.
Dan Druckenmiller.
George Soros.
Paul T. Jones.
Peter Lynch.
I wonder why fund managers can't beat the S&P 500? Because they're sheep. And sheep get slaughtered.
This episode is brought to you by the Felder Report. Each week I go through a ton of research, reading, charts, all that kind of stuff. And on Saturday mornings, I send out a free email newsletter that highlights the ones I found most valuable during the previous week. So if you'd like to sign up for that email newsletter, go to thefelderreport.com and click join now, and you'll be good to go. My guest for this episode is Erik Townsend. I first came across Erik via the Macro Voices podcast, which he hosts, and he's just had a ton of fascinating people on there lately, including Lacey Hunt, Russell Napier, and Hugh Hendry, just to name a few. But Erik is a fascinating guy in his own right. He started a hedge fund several years ago after selling his very successful software business in the late 90s. He had a ton of great stories to tell through his process of transitioning from technology and software into finance. So I really hope you enjoy my conversation with Erik Townsend. All right, and we're live. I'm here with Erik Townsend, software engineer, hedge fund manager, Macro Voices podcast host extraordinaire. Erik, welcome to the show.
Thanks for having me on, Jesse. I'm a huge fan. I listen to your show on the treadmill all the time, and I love your style, so I'm happy to be here.
Well, it's the Mutual Admiration Society, I guess. I'm a huge fan of Macro Voices. I don't miss an episode. But this is actually really fun for me to have the chance to talk to you for a number of reasons. One, your background is so varied, and it's not just finance, which is always interesting to me. And you've spoken to so many interesting people recently that, I'm sure you have a ton of interesting ideas going around through your head. But let's start with your background. You didn't start in finance. Where did you get your start?
No, I was the prototypical computer geek. I discovered computers at the age of, 10 or 11. And my junior high school was the first junior high school in the country to have a computer. We happened to be in Concord, Massachusetts. The next town over was Maynard, Massachusetts, where Digital Equipment, which used to be the number 2 computer manufacturer in the world, was headquartered. So they donated a computer to my school, and I was the kid that was just absorbed with it. And so ever since my, 6th grade, I was computer geek. Unfortunately, that was way before it became fashionable and girls thought it was cool. So I was still computer geek back at the time. The whole chicks like computer guys, that didn't happen until much later.
Gotcha. The whole Silicon Valley rock star deal. But so you started out with computers, and then I think you told me, or it's in your bio, that you spent a lot of time at MIT after that. So 6th grade, you had a computer, you got your start, and then were you just? How did you end up at MIT?
Well, I joke and say that I got into MIT the old-fashioned way, which was breaking and entering, and that's not quite true, but it's close. My dad was an MIT grad, and my parents very much wanted me to go to Concord Academy, which is a prep school in the town that I grew up in, and they didn't have a computer. And the vocational school, where the kids go to be plumbers and electricians and so forth, in the next town over, Lexington, had a PDP 1170, which was, this at the time just really cool computer. So I wanted to go to vocational high school, which my parents didn't approve of. And my dad was trying to talk me out of this, and my mother was trying to talk me out of this. And one of the things that they did to talk me out of it was my dad took me to this weekend at MIT that was for high school students or kids, children of former MIT graduates. And they walked you around the campus and showed you the dome, and this is MIT, and someday you'll be old enough to go to college, and isn't it great? And I just remembered the tour of looking in these windows. We weren't allowed to go into any of the laboratories, but seeing the computers they had there, and I just knew I had to have something to do with this. So I did end up going to a vocational high school. And there was another thing that my dad got me into. It was a weekend, go just once to the Artificial Intelligence Laboratory at MIT. And you could get, at that time, a free login account. It was time-sharing computers. This was all before there were personal computers in the 1970s. And I had this login account. You could use the precursor to modern modems, was called an acoustic coupler, where the physical handset of the telephone got plugged into this little computer terminal. And I could log into the computer at MIT. Well, I wanted to be there. I wanted to have something to do with it. Well, they had in this laboratory the world's first laser printer, and this is before anybody knew what a laser printer was, and this was the days of letterhead means everything. So if you've got something on letterhead, it was taken as gospel. So I basically created one weekend at MIT. I had snuck into the laboratory just by following somebody that had a key and acting stupid, and then following them through the door when they unlocked it. And I made this acceptance certificate up that said that I was accepted to MIT's gifted high school student program and could spend every other week at MIT instead of going to high school. And I took it back to my high school, and it was on MIT letterhead. Of course, it was this, the first laser printer ever was called the Xerox Dover, and it was bigger than a Volkswagen. So I had used the Dover printer to create this acceptance certificate, and I took it to my high school. And the way the high school worked was there was a week of academics, and then there was your shop week when you would go, learn how to be a carpenter or a plumber, or in the case of my school, I was in data processing, which was really learning how to be a computer operator. It wasn't programming. But I got to spend every other week going to MIT, and I couldn't possibly go to MIT in the daytime because they would catch me. So I ended up basically becoming a late night hacker at the Artificial Intelligence Laboratory, showing up generally after 9 p.m. and being out by 6 a.m. or so, avoiding the bigwigs that were there in the daytime. And all the grad students that were working in the middle of the night thought I was supposed to be there. They thought I was the computer operator or something. And the first year or so, I was just sneaking in behind other people. And one day somebody came around with, they changing the keys. Everybody has to turn in their old key and get a new key. And I just took a key off of my keychain from my house, and I traded it for a new key to the 9th floor laboratory where the computer room was. Oh my gosh. And so all of a sudden, I've now got a key. Everybody knows me there. I'm hanging out with Richard Stallman, who later became the founder of GNU, which for computer people was a big deal. And I spent most of high school hanging out at MIT, and my high school the whole time thought it was a legitimate program that never existed. So I just snuck in, basically, and taught myself how to be a computer programmer on MIT's computers.
Well, I just love that story, but most people would not have the, chutzpah, whatever you want to call it, to do it. Was it curiosity that was driving you? Was it ambition? I mean, what was it that really inspired you to say, hey, I'm just going to do this. I don't care what it takes. I'm going to do it.
Well, I guess I was really, really driven and absolutely fascinated with computers. And at the same time, I just had this attitude of my home situation was not perfect. My parents were, all over my case that I had to go to prep school, and I didn't care. I just didn't care about the consequences. And I always assumed I would get caught eventually, and I never really did. It was absolutely fantastic. I learned a huge amount, and it was great. I don't know how I got away with it. Thinking back on it, I can't believe I had the balls to do that, but I got away with it. It was cool.
It's fantastic, and it set you up for to take that path as a career later on, right? I mean, did you go into software programming after that?
Yeah, and it was really what I learned at MIT. Before the internet was called the internet, it was called the ARPANET, and the lab that I was sneaking into played a really big role in creating a lot of that technology. So the development of the TCP/IP protocol, which is the basis of the internet, was sort of being designed at that time. And I remember a lot of the people around me were working on designing those protocols. So I learned all about distributed systems and network computing, and I just thought the stuff they're doing in research research laboratories at MIT must be the same stuff that exists, in the corporate world. So when I, finally graduated high school a year early, I managed to get a job working for this guy for $4 an hour, and I was basically going to be his assistant or something. And he's a programmer, consultant that's working with digital equipment, basically developing application software. And this guy didn't know some languages that I did know just from what I learned in junior high school. And he got himself in a pickle and he needed a little bit of help. And so he's charging like $35 an hour for his time, and he's having me do the work, and he's paying me $4 an hour. And I was so excited to have the chance to, get the experience and everything. I knew it was an unfair deal, but I didn't care. And that guy turned out to be kind of weird, and that I ended up not working for him anymore and going on and trying to figure out what else I was going to do in life. And one day I get a phone call, and it was my future partner, Mike Ronayne, who calls me up and says, Erik, the software that you wrote was fantastic. The other guy that you were working for didn't really work out. He's not working here anymore, but we really need you back. And at the time I was working as a part-time ambulance technician, driving an ambulance outside of Boston for $4.50 an hour. This is around 1982 or so, and or maybe it was 83. And I get this call, and Mike says, the best I can do, we really need you. I can get $45 an hour, and we can just pay you as an individual consultant. And I'm thinking, gee, that just happens to be exactly 10 times what I'm making driving an ambulance. Well, I think I could work it into my schedule. So I basically got my start that way, and I spent about 10 years in the corporate world developing application software. And I was just, the stuff that I saw at MIT was so cool, and it didn't exist. So I started applying the concepts I learned about at MIT about distributed systems. And for people who are software people, there's now an idea called that's funny. It's the second time I've done this in an interview, Jesse. I can't even remember what it's called anymore because they didn't name it until after I was done with it.
We'll
Service-oriented architecture. Yeah.
Okay.
There's an idea now called service-oriented architecture, and I'm one of the people who invented that. And it was just because I was looking at how they build information technology systems in the corporate world versus all this really cool network stuff I learned about at MIT. And I'm like, there's a better way to do this. So I did a lot of really pioneering work, and I ended up in the 90s running this company that I created because I wanted to take this technology to market and show people a better way to build enterprise scale integrated information systems. And the tech bubble was so obvious in the late 90s. I'm like, I got to cash out before this thing pops. And so I
got to just stop you right there and ask you, though, because for us, those of us who were in the markets at the time, for me, it felt obvious, because I was working in the business. But from the software side of it, how was it obvious to you? Were you paying close attention to the markets back then, or was it just what you were seeing from, executives at other companies? What was it?
Well, I think it was obvious to me that tech stocks in general were out of control. And it was a really bizarre thing that happened because originally the way that things worked, I ran a niche software consulting company. So we're software services, not software per se. So we don't really have any intellectual property other than what's in our employees' heads. And the assets of the company are, 25 laptop computers. It's nothing. In the beginning, you couldn't sell a software services company like that for much of anything because you didn't own the software product that was, the basis of what these other software companies, had in their equity. And what happened was a change in accounting rules. Number one, there was this pooling of interests rule, which allowed earnings to be accretive on a backward-looking basis, retroactively for an acquiring company. And in an absolutely crazy way, it was the Y2K fears. This was 98 when I sold the company. everybody's freaking out about Y2K. And what it resulted in was big IT service companies, big software companies, they just became incredibly acquisitive, and they cared more about your ratios than they cared about your revenue size. So we were still only about $10 million in annual revenues, but we had a 28% net operating income, which was unheard of for a consulting company. It was just because we were very good at what we did. We had a small number of very talented people, and we were able to command really high consulting rates. So what happens is, in those accounting rules, they acquire the company, and it becomes retroactively accretive to the acquiring company's balance sheet. So they can basically spruce up their earnings with accounting magic. And what was so frustrating is I invented some really, really cool stuff, Jesse. The people who bought the company had no clue what it was, and they did not care. They loved the ratios. They loved the 28% NOI. They were willing to pay $31 million to acquire a company that had less than 40 employees at the time and no assets other than what's in people's heads. And it's like $1 million a person is basically a finder's fee for hiring our employees away from us, is the way I looked at the deal. This is insane. And it had nothing, and the company really was worth probably more than that for somebody who appreciated what was about to happen. This was 98. The whole idea of service-oriented architecture didn't really get big until after 2000. We were on the leading edge of it. They had no clue that they were buying somebody on the leading edge of anything. They were just acquiring a balance sheet. And it was my introduction to the shift from entrepreneurial management and people who, work hard to create value in the economy to professional management of publicly held companies and how they think. And it was a real education.
Yeah, I mean, so you have public companies focusing on financial engineering. Who would have thunk it, right? I mean, it's standard operating.
And these guys had no clue what we did. They didn't care. They didn't understand. They just wanted to financial engineer our balance sheet into their balance sheet. And
and when you think about how many other acquisitions at the time, I mean, look at how many Cisco was just buying up a ton of companies and still have been. How many companies are still doing that today? But going on back then, buying up companies for that possible financial engineering, but maybe they don't have the same intellectual, value that you guys were bringing. So interesting for me to hear kind of what it was like from that side of it. But so then you sell the company in 98, you said, is that right?
Yeah, and there's another side to that story which I really screwed up. The banker, he called himself basically the business broker, kept telling me, tell him Cushing.com. And I was trying to explain to this guy, look, the .com thing, like, you're not a technical guy. Let me explain it to you. I'm a software expert. He's like, look, I don't care. I'm not a software expert. I'm a business expert. I'm telling you, if it's Cushing.com, it sells for twice as much. Take the hint, kid. And I was just so preoccupied with, you don't understand. Let me explain to you this .com craze. It's about e-commerce companies. And he's just like, just tell them it's Cushing.com. And I'm like, well, we do own that domain name. He's like, that's good enough.
Right. Yeah.
That's enough. And we probably could have gotten twice as much for the company if I had just listened to him and said it's a .com, because .coms were selling for a fortune. All that we used our Cushing.com domain name for was email, but the people that buy this stuff, that do acquisitions in big public companies, are not paying attention. And there were so many people that did nothing of value that were selling their companies for way more than we got. So I blew it in that regard. But it was 98. I was 33 years old, and I did not plan to be retired at that point. It was just, the deal was too good to pass up. When I became aware of what I could get for the company, I said, it's crazy not to take the money and run.
Yeah. Well, and the .com thing back then is like companies adding, blockchain to their name today. I think you see companies today that, I think I saw one recently that was, some type of a marijuana, company, probably just a penny stock, that a couple of years ago changed their name, put marijuana in their name just to get a bump in the stock price, and then changed it recently again to put blockchain in the name. And, you see the stock price surge, 50% or something in a day. It's pretty silly. But, so you sell the company and then you are retired. And What then? I mean, I assume this is, your first introduction to how Wall Street works, not just in selling the company, but then, okay, what do I do with the money?
Well, this was the single most biggest mistake of my entire life, was listening to never take business advice from a lawyer. The M&A lawyer who handled the sale of my company, when I told him my plan is, I have always been fascinated by financial markets. I'm going to become, trader, private investor. I'm going to run my own money. It's going to be great. And he was just so emphatic. And he says, look, Erik, I've seen this so many times. You get a really smart guy. You make a lot of money. It goes to your head. All of a sudden, your ego thinks you can do anything. He says, look, you're a very smart guy, but you're a software guy. You're not a finance guy. This is too much money for you to be running. You are not qualified to run your own finances. And what's more, you're big enough now, because my share of the deal was almost $20 million after taxes and paying the brokers and the everything else. He says, you can get the services of the private wealth management department of the world's most prestigious investment bank to run your money for you. You cannot go wrong with private bankers at the most prestigious investment bank. I don't mention the name of it because they also have a legal department, but people can guess which bank is most full of themselves for being the most prestigious investment bank. And I was totally, completely suckered by these people. And I guess it's because I had grown up in a world where of course there's always con men and sleazeballs in business. But in my business, once you kind of hit the big league, you don't see those people anymore. And I assumed these guys would be smart enough to, their big pitch to me was, we're greedy, but we're long-term greedy. And we're going to work with you for your entire life to make you super wealthy. And, we're going to get paid our fees along the way. They are greedy in all time frames, particularly the shortest time frame. And I got conned into this ridiculous over-allocation to a private equity fund of funds. It was the highest fee structure thing they could think of to sell me at the time. They told me how never in the 100-plus year history of the world's most prestigious bank had they ever underperformed their special investment target returns. They said to expect anywhere from 18 to 22% annualized return from this investment. It ended up losing money in the end. And it was a 10-year, supposedly a 10-year closed-end private equity partnership. This is almost 20 years later, and I still haven't gotten all my money out of the thing. There was somewhere in the small print they could extend it. So I just got totally swindled, and I should have trusted my own instinct and ignored the lawyer. And so I had this great big gap of trying to be retired and living on a yacht and cruising around the Caribbean, which sucked. It was not fun. We can talk more about that if you want. Eventually it was out of necessity when I finally started getting some liquidity back out of this private equity deal that I got suckered into. They had lost half of my money basically, and it was time for me to figure out what I was going to do to rebuild some of that wealth. So I went back to what I'd wanted to do in '98, which is to reinvent myself as a full-time private investor and just learn as much as I could about investing. I got
to roll back to the Caribbean, because I think for most people that's their dream, right? Is to, hey, I'm going to retire early and just cruise the Caribbean. What quote unquote sucked about that?
Well, the thing is, it's everybody's dream, mine included. And all I can say is, for everybody who's ever dreamed that, have you ever done it? Have you ever tried it? For the first few weeks, it's an absolute blast. The weather's beautiful, that gets old. And when you're living away from civilization for more than a short amount of time, it really gets to you. All of the interesting people, all of the intellectual stimulation, they all have jobs. They can't hang out in the Caribbean. So you get deadbeats, you get drug dealers running from the law, you get various people that for some reason are living in the Caribbean. You don't really meet interesting people. So the living on a yacht, and it also just draws all of the wrong people into your life. You know, the guy who has a yacht has no trouble making friends, but they're all the worst friends. So
Right.
it was and it's also a lot of work because, you know, hurricane season is real. You got to get the boat out of the Caribbean. I have a house on the coast of Maine, so I ended up building a big dock there, and, you know, was delivering the boat. The first year, that was a really cool trip. Subsequent years, every year, you know, it's several days underway, getting back and forth from the Northeast down to Florida or whatever, and it just got old really fast. It looks incredibly luxurious and fun. It's not. And I would say to anybody coming into wealth, if you think you want to own a yacht, it's always cheaper to rent them, charter it first, and see how long you last before you get sick of it. It won't take long.
Yeah, you know, it's a common story. You hear people want to retire early, and you know, my question is always, and then what? You know, what are you going to do when you're retired? Because it seems to me it makes a hell of a lot more sense to find something that you never want to retire from, that you want to do forever. That's, you know, intellectually stimulating and et cetera, et cetera. For me, it's the markets, and so I assume for you, that's when you decide, okay, I go back to this idea. The markets have always been of interest to me, and I want to learn how to do this.
Yeah, and you know, the thing is that I'm so much happier now working hard, long hours in front of 15 computer screens than I was on a yacht. And you need a mission, you need a project in life. And I certainly envy people who have enough passion. What I spent several years doing after it was within the first year, it was very clear that it was not going to be fun to just be retired and not have to do anything. And so then I ended up extending the yacht, not because I really wanted a larger yacht, but because it was a really big project. It kept me busy for like a year and a half. Then the yacht is now extended. It's 87 feet instead of 78 feet long. And, you know, I still have no need for it and no real purpose in life. Okay. And I went through several years of just trying to find myself thinking, okay, what's the do-gooder cause that I can get involved with to somehow change the world in some way? That was very, very difficult because as much as there's lots of organizations that are trying to do good in the world, they all have, you know, they're full of people with a lot of the right energy, but they're kind of flakes. They're not business competent, frankly. And I didn't find anything that I could get involved with. It was a do-good cause that would be rewarding. And at the same time, I didn't want to go and start, get back into living out of a suitcase and traveling for business all of the time and doing what I had done before. And, being a private investor, it was just a fantastic experience from the day that I started it is when my life got better again. And the more that I do it, the less it feels like work and the more fun that I have doing it. And it's skin in the game. It's very hard to find a passion that you're going to do something that doesn't make money. I used to think, well, I've got enough money. I don't really need to make more money. Well, then the most prestigious investment bank lost half of my money, so I needed to make money again. But it was just so rewarding to be making money. And, I could do it from wherever I have good solid internet and can set my computers up. So I can be any place I want to in the world. I travel a lot. I took a big trip around the world. We can talk more about that if you want to, for about a year and a half. And, I've just been loving it. And I so regret letting this lawyer talk me out of it in 98. My life would be so much more complete if I had just followed my own instinct and started in 98 what I didn't end up starting until the end of 2006.
Well, then again, you might not, appreciate how much you enjoy the process now without having to go through that time where you didn't have something driving you. I want to find out a little bit more about what drew you to global macro, because, I talked with, Bill Fleckenstein I interviewed a few months ago, and he had a background in technology. And so he has that insight into when he's looking at semiconductor stocks and, that kind of stuff, where he has some kind of industry experience, which does set him apart from the rest of the crowd analyzing that stuff. It would seem like a natural fit for you to go into, trading tech stocks. Why not?
Yeah, I thought about trading tech stocks. The other thing that would be a really natural fit for me would be algorithmic trading because I understand the software engineering aspect of it and everything. And in the beginning, I kind of thought, okay, that's it. I'm going to go back to entrepreneurship of some kind of fintech company, whether it's I didn't know what high frequency trading was at the time, but some kind of algorithmic trading something. So let me go learn about this industry and find out who's doing what and what's it about. So I started going to institutional investor conferences and just trying to get my feet wet and feel my way around the industry. And I looked at what are things like the Bloomberg terminal, and boy, there's an opportunity there for somebody that is the most pathetically mal-engineered software system in the history of the world. But
No kidding.
huge market capture. You need a lot of capital to try to take on Bloomberg and do a better job of what they're doing. So I thought, okay, it's not going to be that. And I was really trying to learn about the industry in order to figure out which kind of fintech software company I'm going to do next. That was my initial thinking. This is probably 2006 going into the beginning of 2007. And somebody told me about Jack Schwager's Market Wizards books, and I started reading them to try to learn about different kinds of, investing strategies and just trying to figure out what needed to be automated with computers where I could do something that drew on my skills. And it was really the Jim Rogers interview that Jack does, and I think it's the first book, where I just got, whoa, this guy is talking about understanding the most fascinating puzzle that there is, which is just what makes the world work. And, he's writing about, learning why when there's a big earthquake in Chile, that makes the price of copper go up and why when, this happens, that it has this effect on this market and so forth. He's like, you can learn about the world and get paid for it. And he tells the story about how he fell in love with it. And I just said, yeah, that's really fascinating. So I got interested in Jim Rogers and just his personal life, and I started reading his books, and I just fell in love with it. And so it's interesting because I am just absolutely hooked on global macro. I've actually had more success trading in terms of making money doing things that have more to do with pattern recognition in the term structure of the futures market. It's really not a global macro view that enables the direct profits that I make, but it's my fascination with macro that led me to discovering those opportunities because it just drives everything that I do. So it was, I think you've been influenced a lot by Warren Buffett. I would say that Jim Rogers is my Warren Buffett, and reading about his life and everything just got me fascinated and hooked on it. And I started reading and just learning as much as I could.
Yeah, that Jim Rogers chapter, Market Wizards is one of my favorite books too. And that Jim Rogers chapter for me is just more underlined than any other chapter in that book. It's I love Jim. I'm going to have to talk to him for the show at some point, see if I can get him on here. But so global macro is really your passion, Erik. That's obvious. What are some of the larger themes? I mean, like you said, you may not use them to trade, but they can kind of inform your trading and help you find trades. What are some of the larger themes that you're looking at these days?
Well, everything for me starts with being as big picture as I can get and understanding the world around us and where we are in the story of world history. And Neil Howe's work in the book, The Fourth Turning, which is really started with the first guy I learned about was Nikolai Kondratiev, a Russian economist who did the work on long wave business cycles. And I think Neil Howe has really modernized that with his book, The Fourth Turning. So it basically is this idea that history comes in seasons that don't repeat, but they rhyme. They last for 20 to 25 years. And right now, since 2008, we've been in the winter season, which is when things tend to go wrong. The previous fourth turning was the Great Depression and World War II. The fourth turning before that was the Civil War. The fourth turning before that was the American Revolution and Declaration of Independence and so forth, the war with the British. And the one before that, I think, was the French and Indian Wars. I can't remember some other war. So the fourth turnings are times when major changes in history occur, when balance of power around the world changes. And we're in one now that started in 2008. will probably run through about 2030. And I think that it is a time, everybody thinks the financial crisis of 2008, well, obviously that's the big deal. Well, if you look at the last fourth turning, everybody thought the Great Depression was the big deal of that fourth turning. And then, of course, they found out that, oh, wow, that was really just the opening act, and World War II was the really big deal. Now, I'm not predicting World War III, but I think in terms of the size of change in the hegemony of, say, the British pound sterling as the world's reserve currency prior to World War II, losing that and the U.S. dollar, that basic changing of the guard from the pound sterling to the U.S. dollar is the hegemonic currency. I think that the U.S. dollar could very well lose its hegemony in the world financial system in this fourth turning, and that we might see a very, very different world in the next 10 to 15 years. So I think that really big change is upon us. The future of the U.S. dollar is a really huge topic for me. It's something that I spend most of my energy on. And although I do agree with the long-term view that a lot of the doomsayers have, which is the U.S. dollar will lose its reserve currency status, I'm not in the dollar is crashing and dollar is going to crash camp. I actually see it the opposite way. I think that the problems around the rest of the world, the situation in Europe, the situation in Japan, they're going to have worse problems than we have in the United States. They're going to happen sooner. And I think it's going to result in flight capital out of the rest of the developed world into U.S. dollars. So I see a final, blow off top push higher. I think the U.S. dollar will appreciate before this is over. But ultimately, 15 years from now, I won't be surprised if the U.S. dollar, doesn't go away or anything. Look at the pound sterling. It used to be the currency of the world. Now it's one of the most important ones, but it's not the one anymore. And that has resulted in a major change in Britain's role in the world. It's not like Britain is the hegemonic power of the planet the way it once was. The U.S. has that title right now, and I predict that the U.S. will lose that title. By the time we get to 2040, I think that Asia's century is really going to be taking off. Does that mean there's war between now and then? I don't know. Could be. But I think that it's economic forces rather than political forces that are driving this. And I do think eventually Jim Rogers will be right that Asia's century is the 21st century. And probably China is going to have a washout before it really, the U.S. had the Great Depression. China's credit expansion since 2008 is a mess. Maybe Kyle Bass will be right and China will crash and, things will really fall apart. If it does, that'll be the buying opportunity of a lifetime because I think that Asia is really going to take off. So a lot of my views are really high level like that. And you're right. It's really hard to trade those and make money next month with a view like what's going to happen by 2040 is a major change in world powers. But it's these topics that interest me so much at a really high level that give me the energy to go learn about things. And there's one in particular, which is what I call peak cheap oil. And we can talk in more detail about that if you want to, but that's what's led me to this term structure trade where I make most of my trading profits. And the term structure trade itself is not that interesting, but the way that I found out about it has been absolutely fascinating.
And so that, well, like you said, these are high level macro themes, but I think it's almost required to be a successful trader on a lot of these levels to have, or at least to be a successful global macro investor, to have these high level themes that inform your other trades, simply as a foundation, because you could be trading I don't know, dotcom stocks and not have an understanding of the larger fundamental picture that's, going on and, become a victim of the downdraft afterwards. So it's really just paying attention to the larger themes and larger trends, really. How does that fourth turning idea, is it really just the oil trades that have come out of that for you, or are there other concepts that, inform the way that you have allocated your assets right now?
No, I think that, there's a big question. I pay a lot of attention to the gold market. I've been kind of indecisive because I do think that the pressures that exist in the whole Western world are probably going to cause massive capital inflows to the U.S. dollar. Of course, gold is priced in dollars. That's a big headwind for gold. It's a good argument to wait. On the other hand, I'm convinced gold is the big winner in the end game. Eventually, we will get to the point where the U.S. dollar is losing its hegemony in the global financial system, and definitely at that point you want to be long gold. Are we at the point where it's time to really be strategically allocated to gold or not? I'm a little bit on the fence. I definitely want to have exposure, but not in a big way right now. I think that we may have $1,000 gold or lower coming in the next few years. If so, that's going to be a fantastic buying opportunity. So the long-term views definitely inform me. Peak cheap oil is a whole other category. It's really another topic.
Let's get into that. What's the idea behind that?
Well, the idea is basically that although I disagree with people who think that the world's running out of oil or anything like that, that's crazy. We're always going to have plenty of oil to run the economy. But the point is, the cheap and easy stuff where you just drill a hole in the ground and oil comes gushing out, that's all been discovered, exploited. It's used up. There's no more of that. Right now, we have this shale boom going on, which was really enabled by malinvestment as a result of the easy money policies that the Federal Reserve has given us for the last 8 years. So you've got massive, massive amounts of capital available in the junk bond market, which has financed the overdevelopment of shale. The thing is, these shale wells are a totally different animal than conventional oil wells. Their depletion rates are just incredibly steep. So you drill that shale well, you spend the money, you get it operating, it produces a whole lot of oil for the first year or so, but then the decline is just astronomical after that. And you can refrac some of these wells and get more oil out of them. But the point is, all of this technology, and when shale plays out, which it will, there's more. There's deep water. There's ultra deep water. There'll eventually be Arctic deep water oil exploration. The point is, it all comes at incremental cost. So the cost of oil production, the stuff that you could economically produce for $10 or $12 a barrel, we're out of that. And the major oil fields in the Middle East are all in decline. And estimates are that by 2030, they will have declined dramatically from their peak production. Yes, you'll be able to discover more oil with deep water, with tar sands, and with these other exotic technologies. It all costs money. So what I predict happens is there are several waves. And the anatomy of a wave is you start with, we used to be able to supply the world's oil demand with conventional oil. Conventional oil production peaked in 2005. That's a fact. It has not been exceeded since then. You say, wait a minute, oil production has grown since 2005. Non-conventional shale oil and deep water and these tar sands, other ways of producing oil other than the conventional just drill a hole in the ground, those have added that capacity. Well, they have a floor. We can't go back to $10 oil because it costs more than that. Just to run even the shale projects, they have probably a $50 break even to recover their investments, and even if they're losing money, they get down to about $22 or so, and it becomes uneconomic just to continue operating them. The cost of the electricity and everything else, they shut them in and wait for higher prices. So we have a floor, and eventually what will happen is shale will get played out. Those resources are not plentiful across the world. You can't take shale everywhere. You can take it beyond the U.S., although a lot of countries are trying to ban it now. Eventually, you get to the point where the shale plays in the U.S. are played out. And right now, I think the Bakken is mostly played out. The Permian Basin is where there is still economic opportunity to produce shale oil. Eventually, that will play out. And the way to get more oil will be to go back to deep water drilling. Well, a lot of those assets have been taken offline and basically mothballed. It's going to cost a lot of money to get that going. So the anatomy of these waves is you start with something like shale. Before, we didn't need shale, so you got $10, $12 oil. Then you need shale in order to produce enough oil. Well, shale was technology wasn't new. Fracking and horizontal drilling have been around for like 50 years. But the widespread commercial application of those technologies was fairly new. So at first, it was very expensive. You needed $80 oil prices to break even on a shale well. What happens is over time, you get good at that stuff. You automate it. You increase the knowledge and ability. You come up with ideas like pad drilling that radically improves the efficiency of shale oil development. Okay, now we can bring those break-even prices down to $40 or $50. Well, what will happen is we get the next wave where it's deep water that has to come next because shale's not producing enough. Okay, now you need $100 oil, so prices go way back up, as they did when shale used to have a $80 break-even price. Then eventually you produce more of the offshore drilling rigs, you automate them, you figure out ways to make them more efficient. The break-even cost of that comes down from 100 down to 70 or something, and you have another wave down in prices. Then you get to the point where you've produced all of the, deep water. You have to go to ultra deep water, and it's more expensive technology. Each successive wave of technology increases the floor in oil prices and also raises the short-term, the crest price, which so far has been $147 a barrel. I predict that once shale is played out and we've got nothing but offshore as a way to get more oil, eventually we're going to get above that price, and we'll probably get to $200 oil. There's a lot of misinformation. People think, well, electric vehicles are going to change everything. And what they don't understand is electricity is not an energy source. It's an energy delivery mechanism. So one of two things has to happen, Jesse. Either there's a radical shift in public attitude towards nuclear energy, which could change everything. And we can talk more about that if you want. I can go on for hours about that. But if you take the current social attitude, which is no way on nuclear energy, you've got to burn some kind of fossil fuel in order to produce the electricity for those electric vehicles. And it's not necessarily oil. It can be natural gas, it can be coal. It changes the dynamics, but you're still burning fossil fuels in order to create that electricity. Hydrogen is the other one people are confused about. There's no hydrogen mines, there's no hydrogen wells, and people will tell you, well, wait a minute, hydrogen is the most common atom in the universe. Yes, it is. But on this planet, it's mostly bonded to other atoms. And, water is a ready source of lots of hydrogen atoms. H2O, 2 hydrogens, 1 oxygen. The thing is, you have to spend lots and lots of money, lots of electricity in order to separate those hydrogen atoms from the oxygen atoms and turn water into hydrogen for a hydrogen fuel cell. So it is super expensive in terms of electrical consumption to produce the hydrogen you need for hydrogen-powered vehicles. So hydrogen and electricity are not energy sources. They're just ways of delivering energy. The energy's got to come from someplace. Now, you could, change the attitude in the world around nuclear energy. That could be a game changer. But even if you got that game-changing attitude change and all of a sudden people were socially, willing to consider nuclear energy again. And by the way, uranium reactors really are a bad idea. Thorium reactors are the way to go. We can get into that more if you want to. If you made that decision, it would take decades to scale up and build the electrical grid and build the nuclear power plants and do all those things you needed. So for a very long time to come, liquid fuels derived from oil are going to be a really big part of the game. And electric vehicles don't change everything. And we're still going to need oil. And as long as we do, we are going to have some challenges. Right now, we've got a glut of oil, an excess of oil. Probably another year before that's cleared. Once we get past that, there's going to be a massive increase in oil prices as we get through this glut. And all of a sudden, guess what? All the offshore rigs that know how to produce those deep water wells, they've been mothballed. They're not ready to go, and it's going to cost a lot of money to get them going.
Yeah. So as a function of I'm just trying to reconcile the dollar view with the oil view. Short term, do you think oil goes back and tests its lows if the dollar is going to rise, and then, before we get a new big bull market in oil? Or, do I have that wrong?
Well, it's really hard to call this. there is definitely an argument. I have been very bearish in the short term on oil prices. There is an argument for a retest of that low in the high 20s, around $30 or so. The thing is that the argument is that the market is not really rebalancing the way that people think it is, and that the continuing oversupply could take us back down there. Well, the thing is that what's happened is, especially in the wake of Hurricane Harvey, the Brent WTI spread widened dramatically. All of a sudden, exports are through the roof. Now, I personally don't think that the market has come back into a balance of supply and demand. What has happened is the accumulation of oil in storage that was most visible in the United States is being moved. It's a shell game. And I sometimes kind of get conspiratorial and wonder who might be gaming things in order to cause that intentionally to happen. I can't prove that may be going on, but I think that what's happening is one way or another, whether somebody's doing it intentionally or not, the growing stockpile of crude oil stocks that was visible in those EIA inventory reports every Wednesday in the United States are going someplace else. The oil is piling up elsewhere in the world, and what you see is this really dramatic drawdown in crude oil inventories in the United States. They're still piling up in Cushing, Oklahoma, interestingly, which I think has to do with Cushing being a little bit landlocked. But as far as Gulf Coast inventories, there's major drawdowns. Art Berman just had an excellent article on his blog about this, talking about how we go another. Go as much in drawdowns as we've had this year so far again, and we're back to normal levels, and that's going to push oil prices back up. So I thought we had another wave down, and what I've been saying for the last year or so is this next wave down is the last one. The low of, let's say it's $30 that I think we get maybe before the end of this calendar year, 2017. That's probably the final low, and it's all uphill from there. It's starting to look to me like maybe that final low already happened. Maybe it's not coming. I'm still leaning towards it is coming, but I'm not nearly as high conviction as I was before. And the reason is not that I think the market is rebalancing, but I think the illusion of market rebalancing is being created by what's happening with a shell game, moving oil and storage out of the United States to other locations around the world.
Okay. I want to come back to the fourth turning idea, because I really just wanted to ask you, is you moved out of the United States in 2009, I think you said. And did that have anything to do with this fourth turning idea, or what was really the impetus behind the move?
No, first of all, going back to my very first trips to Europe as a teenager, I've always had a different attitude. So many Americans have this, USA number one, we're the top dogs, everybody else sucks. I've always thought that the world's a fascinating place, just as I would like to travel to as many different states as I can in my lifetime and see the country. I'd like to see the world. And so to me, when I realized at the age of 44 that I had spent my entire life living in one country when I have the wherewithal to live anywhere I want to, I thought, wait a minute, why would I not try living in another country? And I guess the other thing that was going on for me at the time was in the wake of the financial crisis, and particularly seeing the bailouts, I just had become so frustrated with the situation in the United States. And I just felt like, the government is bailing out Wall Street. Most people don't understand it. Most people I talked to didn't care. I had made my decision to leave before the real financial crisis had hit. I had anticipated that it was coming, and really I anticipated in 2009, although I was way off of the timing, the things you're seeing now, the Charlottesville riots. I remember saying in 2009, I'm getting out of the United States because there's going to be riots in the streets by 2011. Well, I was about 5 years early. The riots in the streets that are all driven by wealth inequality is what I predicted, and I thought, I'm a wealthy guy. I think that for very understandable reasons, most of the country is going to want to kill wealthy guys because they're going to confuse us with the bankers that got these bailouts that they never deserved. And the fact that I actually created value and a lot of employment and did good things in the world is not going to matter when the pitchforks come. And I was actually very concerned about the social stability of the United States at the time. I was way early. The things that I predicted to happen by 2011 or 2012 are starting to happen now. I'm afraid they're going to get worse before they get better. And I do think it's all driven by corruption and wealth inequality. The system that I am so proud to have been born in the country that celebrates government by the people, for the people, and of the people. We have government of the special interests, by the special interests, for the special interests. And unfortunately, what happens is the general public doesn't really ever understand the details. They intuitively figure out that they're getting screwed. They get pissed off and they start throwing Molotov cocktails because they're pissed off. And I don't want to be the victim of hate crime because I am perceived as one of the rich guys. I'm not one of the rich guys that caused the problem, but living on a yacht is not exactly low key. So getting rid of the yacht, living a much more low key lifestyle, and exploring the world has really been very fulfilling to me. So I did have some concern about the domestic situation, but it was more just a desire to want to be able to experience living in other cultures and life outside of just one experience.
Yeah, broaden your horizons. There's so much else out there, and I think you also told me you're a pilot. And does that have enter into or affect your how you trade, how you think about the markets? For me, it's something that is I've wanted to try for a long time. And in fact, when I was in college, I called the Navy recruiter several times. This was after Top Gun, and I thought, I want to do that. And they told me, Jesse, do you have 20/20 vision? I said, no. I said, well, do you have any other? Yeah, I got flat feet. They would go to hell, kid, basically. It was funny for me to talk to Tom McClellan, too, because he was in the service. I think he was a helicopter pilot at the time. And basically, they were downsizing the military through that period in the early 90s. And so it didn't work out for me. So I'm jealous. Yeah, tell me about flying and how you what you enjoy about it and so forth.
Yeah, flying airplanes was really my huge passion all through my 20s and into my 30s. And I was pilot and flight instructor, and just totally gung-ho. It was my passion. And it definitely has helped to shape me as an investor and trader. A lot of people have the wrong idea. If you've never flown an airplane, you kind of look at the picture of the instrument panel. It looks very intimidating, and people think that flying the airplane is hard. Actually, flying the airplane, even a commercial jetliner, is easier than driving a car when everything's working. The thing is that when an emergency happens, it requires an incredible discipline of keeping your head, and particularly what aviation has taught me is that human beings are incapable of making really good decisions in an emergency. It's just something that we're not wired to do. Your adrenal reaction kicks in, this fight or flight reaction. You get superhuman strength so you can, lift the fallen tree off of your kid or something. It doesn't help you to fly the airplane, and it doesn't help you to figure out what to do when you're, in a margin call situation in a trade. And so pilots think about everything that could possibly go wrong, and having a backup plan, and a backup plan for the backup plan, and a backup plan for the backup plan for the backup plan in case that plan doesn't work. And think about things ahead of time and have a plan for how they're going to react. And that really has defined me as an investor. I remember the flash crash. It was in Hong Kong where I was living at the time. It was 3:00 in the morning. And all of a sudden, the flash crash started, and I was long S&P futures at the moment that it started. And one of the things you're taught as a pilot, regardless of whether it's a a two-crew environment where you're talking to another pilot or just flying an airplane by yourself, you always call the emergency checklists out loud. It's just, for some reason, it helps you to not screw up and get it right. So I'm sitting looking at S&P futures crashing, and I'm literally saying everything forward, gear up, flaps up, blue line, identify dead puts the dead engine, verify inoperative throttle to idle, feather that engine, everything forward, 5 degrees, half a ball, and blue line, which is pilot talk for what you do when the engine fails on takeoff. And I was just looking at, okay, I've got to get my pilot head on. It is not time to panic. It is not time to have emotions. And emotions never help you in the cockpit. They never help you in trading. I need to suppress that and figure out what to do here. And I actually, I'm calling out the pilot checklist to get my head into the place where I turn off all emotions and just, what you tend to do in an emergency is try to rush through really important things because you feel that sense of urgency. So I've got to act really quickly. You have to take a deep breath. Okay. Make the right decision as quickly as possible, but take enough time to make the right decision. So I think it definitely has affected me as a trader, and it really has affected a lot of aspects of my life. I'm very good at dealing with emergency situations. I was an ambulance driver, and then I was a pilot, and those are both things that have to do with dealing with emergencies without freaking out, and it definitely comes into play in trading.
Well, in addition to my brother and my brother-in-law are both pilots, and it seems to me that flying has taught them some self-awareness to know their own limitations. And my brother is just VFR rated, and so he's like, I got to look at the weather. I can only fly in certain conditions, and I'm not going to even test it, these other types of conditions. I'm just going to make sure it's, well within my abilities to fly. And so, there's a lot of different metaphors there that are good for trading. Erik, how can people keep in touch with you besides the Macro Voices podcast, which I highly recommend? People want to follow you and your ideas. Where can they find you?
Well, Macro Voices is definitely the main place because that's, my weekly podcast where I express my ideas every week. I do have a website at www.eriktownsend.com. To be honest, I don't really have anything going on there anymore. I used to write a newsletter called Peak Oil Investor. I stopped doing that when I did the podcast. So I think the podcast is probably the main thing. And tune in, check it out. It's a different style from yours, but as you said, I listen to yours every week. You listen to mine. You said you never miss an episode. You might not miss an episode of mine, but you missed a whole bunch of episodes of yours. I was pissed off when, like every Wednesday, I'm looking for the latest from Jesse, and there's no new podcast.
Well,
so
you said you took a break from the website. I'm still trying to write and record the podcast, and it's a ton of work to do it all. So I understand you dropping the website in favor of the podcast. It's hard to do them both. But Erik, this has been a blast, and I really appreciate you taking the time to come on the show. Thanks for doing this, and we'll have to do it again sometime soon.
Oh, it's great to be on the other side of the microphone. Thanks for having me on. I really appreciate it.
And that does it for another episode of Super Investors and the Art of Worldly Wisdom. Thank you so much for listening, and until next time, buy low, sell high.
Looking good, Billy Ray! Feeling good, Lewis!
Man looks in the abyss. There's nothing staring back at him. At that moment, man finds his character. And that is what keeps him out of the abyss.